Tesla is developing a lower-cost Model Y in China. The stock popping on that news, and perhaps because it's just been down a lot lately. Phil LeBeau is here with those details. What do we know about this? How much do you think it's playing a role in what we're seeing in the stock?
A little bit, Scott, but not a lot, because we've known that they're developing a lower-priced Model Y. That has been known for some time. The question has been, when are we going to see it, and what are the definite specifications, including the price? Now, there was a report overnight out of China. That's what got some of the juice going for shares of Tesla, essentially saying that this would be a stripped-down Model Y. That's up to interpretation in terms of how stripped down it will be. The China rollout is expected in the second half of this year. That's not a surprise. Most people have speculated that's going to be the case. And again, pricing and specifics in terms of performance, et cetera, that's to be determined. Can they sell this under $30,000? If they can, when you add in the federal EV tax credit, well, then it could be a game changer. There is definitely an appetite for lower priced EVs in this market. Even if they were to take away the EV tax credit, there would still be demand for a lower priced model. So the question becomes, how much will their sales be impacted? As you take a look at shares of Tesla, keep in mind that UBS has added up a number of the sales reports from Europe, from China, elsewhere. We don't get them here in the U.S. until the end of beginning of May, I should say. They're down 16%. That's the expectation from UBS. Today, it cut its price target down to 130. All of the auto stocks getting a bump higher along with the market today. But remember, Scott, April 2nd, that's the target date everybody's focused on, because if that's when auto tariffs go into effect, it's a whole different ballgame for all of the automakers.
I wanted to ask you about that, actually, because much is being made about this letter that was sent, I believe, to the White House. And the fact that it was unsigned is how it's been reported. Why are we reporting it as such? I mean, is the implication here that Musk, as the CEO, didn't sign it, so there's some ambiguity to who it's come from at the company? Expand on that for me.
I'm not sure there's ambiguity from who it comes from, Scott. Look, Tesla hasn't responded to questions as to why Elon Musk did not sign this letter. And let's be clear here. It's not like Elon Musk can't get a hold of the U.S. Trade Representative. You and I both know that he could talk to him 10 times a day if he wanted to. This is the company saying there will be impacts because Tesla is a manufacturer that does export vehicles. Now, as far as we can tell, there is no indication that President Trump plans to do carve-outs for specific companies. But if he did, then you would ask, well, is he going to do a specific carve-out for Tesla or for another company? That's the question that's being raised at this point. The letter is very vague, Scott. There was nothing in this letter where you said, wow. I mean, Tesla is a manufacturer of EVs. If there are retaliatory tariffs that are put in place because they export their vehicle to other countries, Tesla would feel an impact.
All right, Phil, thank you. Appreciate your insight there. Phil LeBeau.